Hey traders, Mike Sir here. Welcome back to my channel. Many of my students always ask me, how do you know when to sell your stock position and take your profits? Or how do you know when a stock stops going down and starts going back up so you can buy? Well, you have to look at the price trend and see if the trend has changed. But how do you know that? Well, one of the tools that I use are trend lines, and I made a video about this before, which I will include at the end of this video. Now, there are also certain price pattern movements and setups that I look for that tell me that it's time to buy or it's time to sell. So in this video, I'm going to share with you how to identify a trend reversal in a stock. So let's get started. I say this to all my students that you should always trade in the same price direction of the overall trend. Now, the main reason is it's much easier to make money. For example, if the overall market is going up, then you should buy stocks that are also going up. But if the market is going down and you are buying stocks in the hopes that it will go up, then you might find it difficult to make money in that stock. However, it can be very profitable if you find a stock that has fallen sharply in price and you buy it when the price is very low, and then over a period of time, the price rises back up. But the key is you need to be able to identify when the price has stopped falling so you are not catching a falling knife. Now, as you may or may not have experienced, trying to buy a stock that is falling in price can be very dangerous, and this is one of the reasons why many traders lose money. So one of the keys is identifying trend reversals is you're not trying to capture the bottom, meaning you're not trying to buy at the lowest price, nor are you trying to sell at the top or sell at the highest price. The simple reason it's not realistic to do that consistently over time. So what my approach should be is to look for buyers and sellers of the stock to tell us. Are the buyers very strong, or are the sellers in control of the stock and still have lots to sell? So for example, if the stock price has been going down, which means that the number of sellers are outnumbering the number of buyers, we want to see the number of sellers start to lessen and see if more buyers can come in and buy up the stock. Now, if the buyers start to dramatically increase, then this signals a possible trend reversal of the stock, and this is where you can confidently buy into the stock. Now, let me show you some trend reversal chart setups to show you what I mean. There are many trend reversal patterns that I look for, but for this video, I will share with you two chart setups. Now, the first reversal pattern that I want to share with you is actually my favorite setup. It's called a basing pattern. Now, what I want to see before our price reverses to the upside is a period of consolidation or sideways movement. This is a time period when the stock price stops going down and starts to form a base, meaning that the price just goes sideways. This base can be anywhere from a few days, a few weeks, or even a few months. Then what we want to look for is when the price breaks out of its base and goes up. This is when you can safely buy into the stock. Now, once the price leaves that base, it should continue to go much higher, and it shouldn't go back down to the base. However, if it does go back down to the base, then you should get out with a small loss, and this type of setup is called a base breakout. Now, the opposite of a base breakout is called a base breakdown. Now, this is a situation where a stock has gone up in price, and before the stock reverses to the downside, you will see the stock price go sideways. And again, this is usually a time period where the professional traders take profits. Now, if you're holding a stock in this base, you want to make sure that you exit all your positions before the price leaves the base. Now, once it breaks out of the base, the price will go down and shouldn't go back up to the base. Now, the biggest difference between a base breakout and a base breakdown is that the base is usually shorter for a base breakdown. Another trend reversal that I look for involves looking at candlestick charts. Now, if you're not familiar with candlestick charts, please watch my previous video called Best Candlestick Patterns for Stocks. Now, I actually mentioned a few candlestick patterns in that video that could signify a potential trend reversal, and they're called hammer and hanging man candlestick patterns. Now, let me share more details of this type of pattern. Now, the hammer candle forms after a prolonged price decline and is meant to signal a price reversal. Now, it occurs when the stock price trades significantly lower than its opening, but recovers substantially within the period to close near the open price or higher. This signals that initially sellers were in control to push prices lower, but more and more buyers are coming in to absorb all the selling pressure and bid up the prices higher. This strong group of buyers is signaling to other traders that they are willing to absorb any price declines, if any, and that they are giving you the confidence to buy. But seeing the hammer candlestick formation doesn't tell you that the price will reverse right away. The key is to see the price close above the hammer formation and see prices continue to move higher. This will give you the confirmation that the bottom is likely in. The opposite of a hammer formation is called the hanging man. Now this is when a stock has gone up after a prolonged rise and you're looking for signs to exit or short a stock. It occurs when a stock price trades significantly higher than its opening, but reverses sharply within the period to close near the open price or lower. And this signals that buyers who were initially in control to push prices higher, then suddenly many sellers came in to either take profits or short the stock. Now this strong group of sellers is signaling to other traders that they are getting rid of the stock en masse and signaling that they are going to keep selling on any upward movement. And again, seeing this hammerman candlestick formation doesn't tell you that the price will go down sharply, but it's a strong indication that buyers are running out of steam and sellers are coming out big time to take their profits. Before we try to spot any trend reversals on some stocks, please take a moment to like this video. I would really appreciate your support. Okay, let's take a look at some charts together and see if we can spot any trend reversals. Now, please note that this is not financial advice, nor am I recommending you to trade any of the stocks that I'll be talking about. Please do your due diligence on each individual stock. The first company I want to take a look at is a company called Kyndryl Holdings, the symbol KD. Now, this stock basically went public in October 22nd of 2021, and you can see ever since the stock went public, it's basically been declining. And now what we are seeing is a basing, right? You can see here, it's basically just trading between the $16 mark and the $20 mark. So you can see here, sideways. So what we want to look for in terms of this type of pattern is we want to see the price break above clearly this line here, which is around 1950. And once it breaks above this line here or gets out of this basing formation pattern here, it has a chance to go much higher. Another company stock that I want to take a look at is Tesla, TSLA. And you can see here, right here, this is a hammer formation. And then you can see that the price actually confirmed and actually went higher, and it's basically again stabilizing right here. Now, what you can say is that, well, this is also a hammer here. Well, you can see the next day's candlestick actually did not close above that. And then you can see here it actually did, but then again, there was no confirmation, and then it further went down. So as of right now, you can see that this is a potential hammer. It clearly is because it went much higher, but we'll see in terms of the overall chart over the next few days, few weeks to see whether the price will continue going higher. The last chart that I want to take a look at is a company called Under Armour, the symbol UA. So what I've done here is I actually drew a trend line here, the downward trend line, see there. And the key thing here is you can see a hammer formation right here. And then there's a confirmation that it closed above the highs of the hammer. And then you can see it also broke above the downward trend line. So this is a type of stock that I would look for a trend reversal. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.